Welcome to Key Factors Podcast, where knowledge meets ambition in the fast-paced world of real estate and mortgage. I'm your host, Mark Jones, bringing you the latest insight, trends, and expert advice to navigate this dynamic property market. In each episode, we dive deep into the heart of the industry, dissecting market movement, exploring investment strategies, and unlocking the secret to real estate success. Whether you're a seasoned professional, an aspiring investor, or simply looking to stay ahead of the curve, this is the ultimate guide to making informed decisions in the world of property and real estate. So grab a seat and let's uncover the key factors that make all the difference. Welcome to Key Factors Podcast. Let the journey begin. Thanks for joining us for another great discussion on Key Factors Podcast, Real Estate AF. And the AF stands for and finance. And good thing about that, because we're talking about financing today. And I've got some cool things to talk about. There's some announcements, new programs that are coming out. And I figured what better way to share this discussion with anybody but Mr. John Hudson. John, how you doing?
Awesome. I appreciate that, Mark. Thanks for having me back out here.
Yes.
Like I said, now I really get to share my hot sports takes on things these days.
And why is that, John? Why do you get to share more? Why are you unshackled, so to speak?
Unshackled. Well, because just a couple of weeks ago, John Hudson left his previous employer and has started. Yes, I've started my own company. So super excited and thrilled about that. I think this has been a long time coming.
Yeah, absolutely. I mean, wealth of knowledge, somebody well respected in our industry, locally and nationally. What provoked that? What was I mean, it's probably brewing for a while. What was the thought process going through that?
You know what poked that? A trip to Disney World.
Okay,
I know it sounds completely goofy
not
and
at all.
crazy.
I
So
want to know more though.
yeah, the quick little the 90-second version here was, I've been doing this for 26 years.
Mhm.
I've worked for three places: North American Mortgage Company, Premier Nationwide Lending, and most recently Mortgage Financial Services. I was one of the founding members of Mortgage Financial Services. Built it into multi-billion-dollar year mortgage bank, doing retail, wholesale, so working with mortgage brokers and whatnot. But I was killing myself.
Mm.
And with the tumultuous times that we have in the industry, right? Just you have to start wearing more and more hats.
It's true.
Well, so last year took my girls, my daughter and my wife, to Disney World, and we had a blast. We stayed in the safari lodge and seeing zebras, and giraffes everywhere. Super cool. But every morning I was in the lobby with my laptop,
Mhm.
working on broker packages,
Yep.
filling out, responding to 1,000 emails and phone calls and text. And at the end of that trip, we were getting on the plane and we were flying home, and I'm just like, man, I just missed my trip to Disney World.
Pretty much.
I wasn't present.
Yeah.
And, a lot of that's my own fault, right? People say, no, just, be sure you're taking time off. Well, I'm not. I'm built a little bit differently. I mean, if I know that there's things that need to get done, then darn it, I'm going to do it. But I wasn't present for my family.
Right.
And so that really caused me to go into a lot of, think deeper sets of meditation.
Searching.
Yeah,
Sure.
searching. That's why I go run half marathons every Sunday, right? I need that
You're
time
nuts, by the way, for that.
I'm 46, so I'm not setting any land speed records, but it's challenging. But I use that for meditation, and it's like, man, okay, I've been doing this for 26 years. I'm a student of the business. I know mortgages more than, I'm not ashamed to say it, than most.
Yeah.
And I was like, man, I saw a need out there in our marketplace. And not to be disparaging to any of the my former clients or
Sure.
mortgage brokers or mortgage loan originators that I know, but man, I could easily say that in the last few years, on a daily basis, 7 out of 10 originators that I was talking to have been in the business for less than 5 years.
Mm-hmm.
And in that too, I would say that there's a great knowledge gap.
There is, yeah, big learning curve, and I would say a lot of it comes from the influx of 2020 loan officers, recruits, et cetera, that
Got in during
yeah.
the refi boom. Oh, it's 2%. Man, of course we can get you a mortgage loan. Well, those days are gone, and so I saw that there's a lot of originators that don't know how to structure loans,
Mhm.
don't know how to calculate income,
Mhm.
don't understand basic guidelines or procedures, and there's of course the compliance hat too, right? There's stuff that's out of compliance all over the place. So I was just like, man, okay, there has to be a better way.
Yeah.
So why don't I take my talents, do something myself, and now I can also be a little bit more present for my family.
Absolutely.
And so yeah, so I'm jumping back out now in the direct origination game.
Love
I'm going to be talking to my realtor friends
Yes, sir.
and other referral source friends and be like, okay, John Hudson is here to serve you now. In the last, one of my big accomplishments at Mortgage Financial Services was help setting up and bringing down payment assistance from the state agencies to the mortgage broker channel. Hadn't been done before.
Mhm.
And to this day, Mortgage Financial Services wholesale is still the only wholesaler delivering Seth, TDHCA, and TSHAC to mortgage brokers.
Oh,
in the
very
state of
cool.
Texas.
That, yeah.
Yeah, super cool. So man, I've been teaching realtors on their CE course. I know these products like the back of my hand. So man, why not put it to good use?
Yeah. And you know, I think a lot of us managers, owners, um, in this past year, I would say, have done a lot of soul searching.
Yeah.
Just like you.
Oh yeah.
And same, I jumped back in originating.
Yeah.
It is one of those things that you can recruit all day long, but each of those recruits is going to take time away from you
Yep.
and whatever it is that you're doing in your life, and most importantly, the family.
Yeah.
And honestly, it can go great with some, but for the most part, just in my experience, there's a lot of turnover in this industry, and it has nothing to do with you as the mentor. It's the new to the business loan officer that thinks the grass is greener on the other side, or they're not listening to those needle moving activities that you say that they should be doing.
Correct.
And at the time, it's tough because they're not seeing you do those things.
Right.
Which it's kind of cool jumping back in to go, guess what I'm doing? Needle moving activities.
Yeah.
Guess what?
Yeah.
It's working. You know?
That is the fun part, right? So I've got a great core group of folks that came with me, and so we're doing sales huddles every Tuesday, and there's accountability sheets, and guess who's on there too?
You are.
Yours truly.
That's awesome.
So it is right. It's the mortgage industry. And I know I told you this, this before, but I fell in love with it when I went to my first closing and saw a single mom cry at the closing because she got a house for her kids. And now today, and unfortunately, maybe it's just a sign of the times, but I see too many people that think, man, I'm going to go do a funny TikTok video, or one Instagram post, and I'm just sit back and wait for the phone to ring.
Mm-hmm.
Man, it doesn't work that way.
No.
And you know what? If you're doing funny TikTok videos, that's great. Awesome.
Yeah.
Because they are entertaining.
Absolutely.
But I see a lot of them that are missing the educational component of really showing consumers what their options are out there.
I agree.
And so I know that there's a better way.
There is. And I call it boots on the ground in addition to whatever you're doing on the social media world, because social media is what we want it to be. And if you're not in the trenches, if you're not shaking the hands, kissing the babies, all that good stuff to provide, and in this day and age, the key and value is education.
Yes, it is.
Teach, show them how. The whole concept of teach a man to fish. We've got to teach these agents how and what options their borrowers have so that they can strike the conversations that then push over to us, giving us the opportunities.
Well, and the key there too, right, is also the concept of responsible homeownership.
Yes, sir.
And I know that there's, and I don't blame people for it, right? Nobody wants to be the bearer of bad news or be the bad guy and be like, oh, well, yeah, we can do this loan, but we probably shouldn't.
Right.
And unfortunately, there's a lot of times where you just have to be honest and be like, if we do this loan, we're putting this family into a bad situation. And, we've seen it I've seen it over and over and over again. You go, man, these borrowers are literally one flat tire away from an early payment default. Right. And so that's what I don't think there's much worse than having a family getting foreclosed on.
No, I agree 100% with that.
Yeah.
So give us the name of the company.
Yes.
And have you guys already, I know it's super new.
Yeah.
Have you guys already have websites, stuff like that, or not just yet?
We do. No. We do. So the name of the company is H&M Mortgage Group.
H&M, and how would somebody find you? Where
that
would
be at www.hmgroup.com. mtg.com.
MTG. Oh, wow. That's
Yeah.
impressive. Joey, if you could throw that reference up there, reference screen for just a moment. Boom. This is where you can find Mr. John Hudson,
Yes, it is.
senior loan officer, one of the most trusted that I have utilized for many years to get the right information. That's pretty cool. So, are you guys a broker shop?
We are a mortgage broker at
Okay,
this time.
very good.
Yeah,
Very good.
super excited. And so the H stands for Hudson.
Yeah.
The M stands for Morton.
Boom.
Robin Morton is my partner on this.
Okay.
And she was one of my mortgage brokers back from over 20 years ago. And she's been with me for a long time too. And, one of the more respected originators that I know just based on her knowledge and skill set. Now, her specialty is high-end new construction custom home financing.
Okay. Okay.
My specialty is, well, I know a lot about down payment assistance.
That's right. That's
So,
right.
we've got a great
You
yin
can
and
kill the
yang.
reference.
We've got a great yin and yang here, and then scroll down a little bit, and then so we're thinking, okay, well, what are we going to call this?
There
And,
you go. Back to reference. Go ahead.
oh no, and scroll down and look at my little tagline there. You can't spell home without H&M.
Aha, that's genius.
You see what I did there?
That's genius. Yeah. Pretty
So-
clever.
So I am pretty good at cheesy marketing too. I love cheesy marketing.
Hey,
'cause-
cheesy has worked for me for 13 years.
Yes, no, it sticks out.
Yeah.
I mean, shoot, I remember you were the first one with the wrap truck in
That's
San
right.
Antonio.
And
And be like, hey, there goes Mark Jones.
People would ask, does it work? And I'm like, you just asked about it. It worked.
It absolutely works.
But the funnier stories come when I let, like, for example, Jackie, she'd drive my truck every once in a while. So she'd be driving and she gets back to the office. She's like, oh my God, you would not believe the amount of people that waved at me thinking I was you.
Yeah.
Like, just keep on rolling.
It works.
That's funny.
Absolutely, it does.
And
So-
a lot of folks would say, Mark, why do you have John on here so much? Why are you helping promote his mortgage company? Aren't you guys competitors? And for me, I don't believe that anybody else is a competitor, even locally, simply because there's enough business out there.
Absolutely. I mean, yeah. I guess technically we're competition, but we're also friends.
Absolutely.
And at the same time, this is what I've always preached. Even going back to when I was helping to organize and run the San Antonio Mortgage Professional Association back then, it was like, look, out there on the streets, yeah, we might be competition, but here together, we're all
Right.
brethren. We're all facing the same challenges. We're all trying to serve the same consumers, and as long as we're doing people that are doing business the right way, I love them, I respect them, and let's continue to work together because at the end of the day there's still a lot of homes that need financing.
Absolutely. And I also, just to add to that, is the concept of where does the growth come from if you're only focused or only able to kick ideas off the people that are in your inner circle or in your close sphere? It doesn't really happen. Cross-pollinating is how genius things happen in any industry, in my opinion.
Yeah, no, it's how you grow.
Yeah.
That's the whole mindset of getting out of your comfort zone.
Yeah.
That's the
100%.
only way that you're going to grow.
So, in the spirit of getting out of the comfort zone, this sounds like a great transition to what our topic is today. And we're going to be talking about down payment assistance. We're going to be talking about some of the nuances, some of the new programs that are re-announced, et cetera. So, if you want to start with something like that, let's get into it.
Well, yeah, no, we could just jump right out there, and actually, it's kind of what prompted me to reach out to you was last week. One of the largest wholesaler in the country rolled out a new program, 0% down. All right, sounds awesome and fantastic, but immediately, my feeds and I'm sure everyone else's feeds,
Yep.
it was all over the place. Oh, 0 down. But no one was really educating with their announcements.
Correct.
And I get it that we all want things to go out there and sell, right? It's the new shiny object, but we have to make sure that we're doing it responsibly.
I agree.
And in some of the various social media groups, I mean, I actually wrote down a couple of the quotes that just stuck out to me and drove me nuts. But one of them was, and this was from a loan originator, says, the clicks and conversations the program creates for us using it as marketing play are all worth it. I don't really plan on doing much of them, but the traffic it creates is where the money is at.
Wow. I appreciate him for being honest.
I appreciate the honesty, but it also just shows the disingenuousness of some of the marketing of these products that are out there. I mean, if you're gonna promote it, man, I really hope you have the full intention of using it.
Correct. And it almost validates the concept that I preach often, which is the whole bait and switch.
Yes.
That's what they're doing.
Right.
In that statement, he says, I don't plan on doing a lot of them.
I'm going to advertise it, but I'm not planning on using it.
Right.
Well, then what are you doing?
I just want to get the phone ring so I can start the conversations. Well, to me, that's a little deceptive.
It's very disingenuous. And it goes back to, that's why, I've always been a huge proponent of the TBD approval.
Yeah.
Let's get these borrowers approved before they go shopping.
Absolutely.
Because the home buying journey is supposed to be just that, fun, exciting, and new. It's a journey. Well, if I'm jumping my toe, I'm putting my toes in the water for this journey, and then that's going to be completely not even offered to me, or I'm not going to qualify, or expectations are not set properly, or the builder says the payment is X, but it's really Y.
That's right.
So now all of a sudden the journey has a dark cloud on it.
In addition to that dark cloud that you're talking about, and I know exactly what you mean, how do I say it? Good news travels fast, bad news travels faster.
Yes, it does.
And that in itself, the journey that we're trying to create, that streamlined process, the experience that a borrower should have is intended to lead to them being thrilled at the end, promoting it, giving you praise to their friends so that they know that not only is it possible, but it was a cool journey. They had their ducks in a row. It wasn't the 11th hour and we're still asking for documents. Having to switch programs last minute. There's so many different nuances that, hey, when the shit hits the fan, we got you.
Yes.
John, I'm sure you've had to think quick on your feet as well.
I mean, there's always been fire drills.
Yes, sir.
There, right?
Mm-hmm.
But now correlate that too with one other thing. The last time I was here, we talked about the NAR settlement.
Correct.
And how the impact is going to be on buyers agents.
Yep.
Well, still buyers agents now more than ever have to be able to show their value to a home buyer. And so again, if you're aligning yourself, in my opinion, with somebody that is just doing something solely for disingenuous marketing efforts, at the end of the day, you might get a quick buck here and there, but that is not a long-term value building strategy.
Agree. I do agree.
And so that's where we just got to come back and align ourselves with, local licensed mortgage originators that are doing things for the right reason.
Absolutely.
And when you do it for the right reason, the money follows.
It actually does.
Yeah, it's weird how that works out. It's weird. I think the quote's from Jeffrey Gitmer, and the quote is, "I don't want referrals, I want recommendations."
Ooh, I like that.
And I was like, you know what? That is
strong.
Yeah.
And such a couple of different letters in that word that change the meaning and the power that it brings with a recommendation versus I'll refer you to
versus,
them. No. I recommend them.
Yeah, versus here's somebody to call versus you have to use my guy.
Yes. That's a huge difference. And I think that's something that we as loan originators should be striving for.
Yes.
Is the recommendation, not the referral. Man, that's strong. Put that on a t-shirt.
Yes. Plan on it, right? I don't even have t-shirts or business cards yet. So we're still building. And
that's okay. That's okay. And I know that it's a tough build, been there before. But I know that you've got the right people around you. You've got plenty of resources. I don't have any doubt that you're going to have more people flocking to you.
Yeah, no, it's been what I mean. Launching this new venture, what's been really great to me was the number of people that have reached out and said, "Man, this is awesome. Good for you." So, what took you so long?
That's what I was thinking too. Is what took you so long? But I get it.
It's I was an executive at a company.
That's right.
I walked away from a
nice
comfort
package.
zone.
Nice package.
And it's but at the same time already, my wife has already told me that she feels like I've been more present. And this Friday I get to volunteer at my kiddo's field day at school.
How cool.
And my daughter starts 6th grade next year.
And what I also have learned in the last year, mostly the last, what are we in, 5 months? Last 5 months, once I picked up the laptop again to start doing loans, is consumers are very understanding that you are also a human being.
Yes.
You've got things to do as long as you're setting the right expectations.
Boom.
As a matter of fact, I had a realtor, close friend, great guy, make a comment that he was like, "Hey," and backstory, I sent a text in the group, and I always like when, if you're going to refer me something, put us all in a group so we all know what's going on. There's no misconception, no communication issues, anything
Yeah.
like that. So within that text, I said, "Hey, is it okay that we meet at after 7 because I've got this event that I've got to go to, et cetera, et cetera. It happens to be mud volleyball. We do it once a year, et cetera."
I was like, that's crazy.
And side note, he was like, "Hey, let's kind of keep the personal stuff to a minimum." And I'm like, I don't know if I agree with that at all, simply because I want them to know I'm human.
Yeah.
Who knows if matter of fact, if there's somebody that can't respect that, I don't think I want to work with them anyway.
Right.
You know?
Not a good fit. And that's okay.
Right.
Go find somebody that is a good fit.
Right.
That's okay.
Absolutely. Anywho,
Yeah.
sorry.
So
We could talk forever.
coming back in the program, we really can. So anyway, all of a sudden, social media feeds blasted with the zero down program, and people getting excited and whatnot. But then you gotta go back and you gotta look at the fine print.
Yeah.
And the one thing that really stuck out of me right away with the fine print is, okay, with the zero down product, it's a 97% conventional loan.
Mm-hmm.
Awesome, but conventional loans can be tougher to qualify for.
Absolutely.
Right. So you have this huge gap. You have this huge field of prospects. So now it's a 97% conventional loan that's been put out there. Field gets a little bit smaller. We're a couple of options with it. If you are not a first-time home buyer, then you are limited to 80% AMI.
Okay.
Pool shrinks.
That's right.
If you are a first-time home buyer, not an income limit, as long as you have over a 700 FICO score.
Shrinks again.
So and so the pool continues to get lower and lower and lower. And then the last part of it was that it's a second lien at 0% that is repayable.
Okay, so it is all repayable. There's no forgivable side to it.
Right. It's
Gotcha.
It's forgivable. I mean, so when they refinance or sell the house, they're gonna have to pay it back. The other cap too was that it's up to 3%, up to $15,000, which is also kind of limiting.
Absolutely.
And yeah, while there may be, and I had posted a video on this Friday too. It's like may fit certain borrowers. Awesome, more
Right.
power to it. But as originators, we can't be too fast to just all of a sudden forget about the classics.
Correct.
And I'll put this out there. I mean, the challenge with TSHAC, Texas State Affordable Housing Corp., the challenge with SETH, Southeast Texas Housing, the challenge with Texas Department of Housing and Community Affairs, and this, they're not money makers.
No, not at all.
That's right. So
it's one of those things that ever since I got into the industry, I've done plenty of bond loans throughout my career. And at previous shops, it was frowned upon to do them. So I'll be honest.
Yeah.
When I became a branch manager, I took that same mentality for a short period of time until I snapped out of it going, wait a minute.
Yeah.
These still people are going to be able to get into a home. So what if we make less as a company for them?
Right.
There's still opportunities, number one, for them to tell more borrowers, potential borrowers, for them to refinance down the road, and for you to feel good at night when you go to bed knowing that, you know what, I found the program that will work for these people.
Yep. And that's how you get from referral to recommendation.
Yes, I like that. I like that a lot. You're right.
So you do it for the right reason. So I look at it just from the educational standpoint. So as a mortgage broker, total compensation on a TSHAC, TDHCA, or SETH loan is 1.5.
Ooh.
So still got to pay bills out of that.
Mm-hmm.
There's still a lot of work to do. But again, you know what? If I have to go out there and originate 1,000 of these suckers, you bet your rear end I will. That's because I believe in what the program does.
Yeah.
as far as bridging a lot of gaps. And I've got data to
No, and
to
you
support
are
that.
correct. I mean, that goes hand in hand with the home affordability issue that we're seeing.
Mhm.
Is it truly the payment that people are balking at, or is it the payment plus they've got to come up with the funds plus the closing costs plus? And if you're removing some of these layers, it's bringing their anxiety down.
Yep.
Their guard is coming down. They're starting to trust you, and then now they're willing to listen to what it looks like to have a higher payment and how you can plan for it. In addition to what things they can potentially get rid of, pay off
Yep.
to mitigate or offset that higher payment that could be temporary. I'm not going to say it's for certain that it's temporary because we don't know what rates are going to do.
Yeah.
But chances are in the future, rates will eventually come down,
Right.
giving them the opportunity to get it lower.
Fix today.
Yep.
Move on down the road.
That's right.
If there's something that, if you're comfortable with the payment,
Correct. That's right.
Today, get in there.
That's right.
Don't delay. And so I kind of fall back on the T-Shack stuff here. And so just now, I also happen to note for everybody, I am on their lender advisory board for T-Shack.
All right. So y'all out there, we know somebody that knows somebody, huh?
Yes, I can pick up the phone or even send a text, which is great, right? But so consider these numbers for T-Shack, for example. So last year, 2023,
Okay.
they originated 11,240 loans.
Okay.
So that's over 11,000 families that were served just with T-Shack.
And that's just in Texas.
Yes, that's just Texas. Now T-Shack, they are the largest HFA in the country.
Okay.
Believe it or not. Now Texas is also a big state.
Yeah, true.
But think about that. There's over almost 1,000 families a month that are utilizing T-Shack.
Yeah.
Average FICO score was a 698. So, below that 700 that this other program that you have to be at, versus 698, and you don't have to be a first-time home buyer.
It's true.
The income limit was the big one that stuck out at me, though. So if you do have to go under the 80% AMI program with this other loan deal that was out there, so Bexar County today is $71,440. That's 80% AMI.
Okay.
Versus T-Shack, on the other hand, their income limit, which hasn't been adjusted yet, it'll be adjusted in a couple of weeks.
Okay.
But as of today, your income limit is $119,000. So almost 120, which really falls more in line, in my opinion, with a dual income
situation. Correct.
So if you're back at that, and this is again just where I say that there's challenges out there. So if you're back at say you're at that 71,000 for the AMI, so that's income limit of $5,953 per month. So what's the highest ratio you've seen on a conventional 97?
Conventional 50.
I mean, yeah, so
49.999.
right? So 49 DTI on that would be the max debt to income ratio.
Right.
Your payment would be $2,917.
If you have no debt.
No other debt.
Correct.
No car payment, no credit card, no installment, no student loans, nada.
I haven't met a single person like that in the last 6 months.
It's been a while, right?
It's hard out here.
So then you look at that and you go, okay, well, and now today I say that the 1% rule really applies, right? I mean, whatever your loan amount is, it's 1%.
Yeah,
that's what your monthly
very
payment's
close.
Going to be, right? Más o menos, especially with homeowners insurance,
correct,
going up
and taxes, right?
Yeah. So now you're looking at, assuming they have no other debt. Now you're looking at a $290,000 loan. So consequently, too, right? So now let's call it a $300,000 loan sales price. Remember, that program was 3% assistance up to 15, so they're really only getting $9,000 in that case. So
was it worth it?
It's a little bit of a challenge where, the T-Shack program, and what I really appreciate is that they will go up to 5% assistance,
right?
So that way you're covering down payment plus some of the closing costs that are in there too.
Right. And what you're actually doing, and I don't know if it's the intent or not, you are shedding some major light on the marketing tactics that are being used, the programs that are being created to only serve as marketing
Yeah. I mean,
ploys.
it kind of is.
Does that make sense?
Yes. Oh, absolutely it does. And you know, the other thing I'd say about this other investor, and I think it's brilliant. It's a brilliant strategy to also protect their portfolio of loans they service from any runoff.
That makes sense.
Because
You got some
hey,
strict
borrower,
requirements.
we could pay you. You know, we could refinance you, but you got to pay this off.
That's right.
And you know, I don't see home values getting much higher and appreciating. You know, they
As
are going to
rapidly,
continue to
yeah.
appreciate, but it's going to be at a much slower pace.
Correct.
So it's going to be a while. Versus where, you know, again, the T-Shack program, the main thing behind it is forgivable after 3 years.
That's right.
So we'd take that same $300,000 sales price. Let's say they do 5% assistance. That's $15,000 that they're going to get that will be completely forgiven
Right.
after 3 years, as long as they live in the house.
I love it. As a matter of fact, let's throw up an example. If you can go to reference, Joey, I'm going to put up this rate sheet. And I just went to this one. We can jump over to the other here after this. But I want to compare what you are seeing in these social media posts. And I've heard it from realtors, I mean, almost immediately, because like you said, it just starts flowing through the feed.
Yes.
0 down, 0 down, 0 down. When you have programs right now that we could create some misdirection marketing concepts to do the same exact thing.
I absolutely could.
Yeah.
We also have to be careful with the term 0 down.
Oh, 100%. Yeah, you are correct. That's funny. 0 down, 100%.
Hey, there you go. You know, because it's funny. You think back. I mean, we talked about that RESPA or that misleading false advertisement with that home builder.
That's right.
They got popped for saying 0 down.
That's
Why?
right.
Why was it not 0 down? Because the borrower still has money they're putting into the transaction.
That's right.
You know, now you could say no down payment.
Right. No down payment required.
Yes.
In many situations, because there's still situations that it could possibly. What if the home comes in short value and the seller says, take it or leave it?
Or you have a buyer that's still putting money up front.
There you go.
So
Good point.
if you say 0 out of pocket, you're going to be in trouble.
Right.
Unless you're paying for the appraisal.
That's right.
Which means you're paying for it in the rate somewhere. So
it's true. So John was talking about the 0 down program that was rolled out that you guys are seeing tons of marketing on social media. And I'm just going to go directly to this My Choice Texas that clearly states forgivable.
Yep.
Now, those of you tuning in, listening, watching, you can find these rate sheets daily. They are publicly available 100%. And you can see and check whoever it is that is offering other programs so that you can see apples to apples on what the rate offering is as opposed to what you're being told or shown in a unethical post, maybe.
Yeah, no, and I think that's good. You know, we need to put the links out for these.
Oh yeah,
so that way our real estate partners can go and check them themselves. Because that's the other thing too is if somebody says, "Oh, well, I could get a better TDHCA rate than that guy."
I've heard it before.
Me too. No, the state sets the rates.
I'm like, are you going to hope and wait till next week when they change? I don't get it.
Right. Yeah.
So on here, you can see, and I want to make sure that I articulate how to understand and read these rate sheets because all the different bond programs, they have their different nuances to the qualifications, income limits, things of that nature. But as far as the rate sheets, they are all very similar in how you come up with the rate as compared to the amount of funds that you're receiving. So for example, in this case scenario, we've got the My Choice Texas Home forgivable. This is after 3 years of having that loan. You can use a government FHA program or conventional, and we're looking at this HFA here. And you can see that if you request 2% in assistance for any of these programs, you're looking at 7 1/8, 7.875, and going further. So all the way up to, and it used to be 5%. Hopefully they'll bring that back eventually. I don't know. Matter of fact, no, but John, is that something that they tell you guys behind the scenes?
They don't. So TDHCA really doesn't. So just for you to know, for everyone to know. So TDHCA, most of their financing, like 99% of it, does come from bond issuance.
Okay.
So And the problem with that is, if you're going to put money out for bond issuance, that means you have to have investors that want to buy it.
That's true. Yeah.
And with the volatility that we've had in the marketplace, that no one's really buying at least TDHCA bonds for 5% right now.
That's basically what it means.
Yep.
So you can see here, 4%, you're going to get 7.625. Now, at times, these will go away. Like I mentioned before, 5%. One day it was there, the next day it was gone.
Yeah.
Similar to, matter of fact, they don't have it on this one. Maybe they have it on the other. We'll switch to a different one. Let's see here. We'll go here and I'll jump over to this one. So you guys can see this. And this is going to be T-Shack.
And T-Shack, and just to note on there, T-Shack does have a 5%. But they get their money from the secondary market. So they're actually putting this out there every single day.
Really?
So that's why they don't.
I didn't know that.
Yeah. So that's why T-Shack doesn't run out of funds.
Makes perfect sense.
So you'll see like when they do have a bond up there that shows nothing.
Right.
Because that was limited availability.
Yeah.
Versus their other products they're getting from the secondary market. So they do have funding for it every single day.
Gotcha. And those of you that are looking at this and going, wait a minute, wasn't the other rates over there higher than what I'm seeing here? That may be the case, but there are situations to which the guidelines behind the scenes don't apply to your borrower. So you have to use the other alternative option of going with the higher rate because maybe they're not first-time home buyers and they still need down payment assistance. Maybe, go ahead.
Well, I was just going to say, I mean, and that's as mortgage professionals, that's why if we're going to sell these products, we have to be vested in making sure that we know the program parameters.
That's right.
So when the loan application comes through, we can kind of run it through our matrix and then present the borrowers kind of the good, better, best of each.
Yes.
Door number 1, door number 2, door number 3, choose your own adventure.
Right. And I think for me, the biggest thing, and speaking to borrowers, is make sure that these loan officers are explaining why their recommendation is
How
this.
come and why.
That's exactly right. Just
Yes.
ramming something down your throat because that gets you to the finish line. It's not enough, in my opinion, that you need to know the how and the why behind it.
Yeah. And so another thing just to point out here, and TDHE had the same thing too. You notice that there's a different interest rate, right? Based on the different levels of assistance that you get. And again, in my opinion, this goes back to why the to be determined pre-approval is so important.
Yep.
Because it gives the consumer much more negotiating power. And you know what? If we can, let's say, for example, okay, I have this borrower pre-approved today on 5% assistance, but when we go to make that offer, if we can get maybe 2% more in seller concessions,
right,
then look, my rate goes from 7.625 down to 7.125. That's a huge difference.
Huge difference. And we've got situations that come about. Just had one recently where there were some repairs that needed to be done, and the seller was asking the borrower to ask us, the lender, if we could contribute to the deal in any way. And this was a bond program.
Yeah.
And I had to educate the realtor, hey, there's no funds here. They got them.
Yeah.
We structured this deal accordingly. So I hate to say it, but you guys are the only ones that can contribute.
Right.
You're left.
Or Mr. Seller, if you really want
There
to sell
you
this
go.
house, fix it.
Come to terms. That's right. So yeah, I mean, there's plenty of different options when it comes to this. We've talked plenty of time on benefits, things of that nature to these programs. I want to talk about. Go ahead.
Hang on. Well, I was just going to add one in there. The other thing that's not talked about is with that other program that's being advertised, there is no mortgage credit certificate available for that.
Okay. Okay.
So with T-Shack and TDHCA, they still have mortgage credit availability. So what is a mortgage credit certificate?
MCC. Yeah, let's go over that. Do you still have the reference up there, Joey? Oh, good deal. So let's go back to this here because that should have. They normally say with MCC.
Yeah, I think they're probably waiting for their next issue.
Possibly so. Right here.
Yeah. So they've got a 20% MCC, but they have no, let's see here. Yeah.
That's this one here.
Yeah.
Okay.
So target area combo.
Gotcha. But go ahead. Keep explaining that. You can throw the reference away.
So I love the mortgage credit certificate, and it's one of the most underutilized programs that, because, well, quite frankly, a lot of loan officers just don't even know about it.
Absolutely.
So, what is a mortgage credit certificate? It is a dollar for dollar tax credit equal to a certain percentage of the mortgage interest the consumer pays.
Mm.
So, TDHCA, their MCC is 20%. T-Shack's is only 15%. So, I jotted some numbers down just
Please, go
based
ahead.
off of what T-Shack did. So, put this into perspective, right? So, for everybody out there, follow me here.
Okay.
A consumer today getting 5% down payment assistance from T-Shack, their note rate would be 7.625. If we are including the mortgage credit certificate for that borrower, their actual effective interest rate is going to be 6.48%.
Wow. And the reason for that, go ahead.
The reason for that is because the borrowers are going to get 15% of the interest they pay given back to them in the form of a tax credit, either at the end of the year, or they could adjust their withholding and use it throughout the year. But
Right.
so in year one, based off a $300,000 loan, that would be $3,417 the borrowers would get back based on that number. But it's the gift that keeps on giving. So, and this is based off of after, assuming the borrowers never refinance, which
Right.
they will. But after 5 years, the borrowers would have gotten back a total of $16,741.
Wow.
And after 10 years, it's $32,000.
Wow.
So, and when the borrowers, just FYI, so when the borrowers do refinance sometime in the future,
Right.
they can actually keep their MCC.
Really?
Yes.
That I didn't know as well.
There you go.
Keep giving. Let's see.
So, so it's just there's all these little nuances that people don't know about,
Right.
that really can be, or really should be talked about to a consumer.
Absolutely.
Because that your people aren't going to be in their house for 30 years.
So you're saying this MCC shouldn't just be used when you need some DTI room?
Yes. Well, and that's the other thing too, right? So that $3,400.
Only time that comes up in the conversations I hear when people on the social media.
Right. It's that's a benefit of being able to squeeze a loan in through.
I was going to say that's more of a ploy or a Band-Aid.
It's a Band-Aid underwriting trick.
There you go.
But in reality, I wish that I knew about the MCC when I bought my first house.
Mm.
But everybody should be being able to use that. And so just to give you an example, right? So if at 3%, if the note rate was 7.125, the borrower's effective interest rate would be 6%.
Wow.
So, and their tax credit in their first year would be $3,192.
Right.
And it's real money.
And I think it's important for people to understand that money and the way that it is applied is directly off the payment when calculating DTI.
Yes.
It's like dollar for dollar.
Right. So, T-Shack, for example, they changed their guidelines, so it's just effective income.
Okay.
But the math still works out. If the borrowers only had $5,000 a month in income, now they'd have
5,166,
250 or whatever.
Oh, it went up. Okay, that's right.
There is no maximum, so that's $3,400 a year.
Wow,
that's real money. And so that
So that pause.
Yeah.
Because I want to be educated here. That whole $2,000 number that we used to use divided by 12 comes out to 166.
That's old.
Gone.
Yeah.
Wow.
Yeah. Right. Mind blown. We need the little graphic to go off.
I'll throw it in.
And so it's super important that again, this just boils down to why borrowers and realtors, for that matter, and home builders and financial planners all need to be educated on this, on what is truly out there and available to consumers, and not just marketing gimmicks.
Right. No, that's a huge, powerful statement, and it is something that I think, well, I hope that more adopt. It's very rare, but I do believe that it's something that should be respected if you come in contact with a loan officer that knows their shit like this.
Right.
100%. And it's not, unfortunately. Yeah, go ahead.
No, I was just going to say, the other definition, and this is what's cool too, right? So the definition for these programs of a first-time home buyer is obviously somebody that's, a first-time buyer. But what does that mean? Somebody that has not owned a primary residence in the last 3 years. So if you had somebody that moved here from California, they owned a house out there, they moved here, they've been renting, they still have this other rental property, they're still a first-time home buyer
As
by
long as
definition.
3 years have passed, you're
As
right.
long as 3 years have passed. The other part of that too is if the house happens to be in a quote unquote targeted area.
Mm.
So there,
A
there's
lot of folks miss that. Yep.
there's a lot of areas in San Antonio that are
Right.
considered targeted. A giant chunk of inside
Correct.
Loop 410. And then the third one, well, any qualified veteran is technically a first-time home buyer.
No way.
Yes.
That another new one. Wow.
So what does that mean? So what is a qualified veteran? It is somebody that is not active duty,
Okay.
and was honorably discharged, which so like 99% of our vets, 99.99% of our vets out there.
Wow.
So which means that they could own a house today,
Yep.
convert that to a rental property, buy another house tomorrow, and still meet the definition of a first-time home buyer.
Wow.
Right.
I think that in itself is going to make people's head
Yes.
spin because
And
I didn't know that.
it's not talked about enough. So
No, it's not.
So now that I'm originating again, you
Yeah.
bet your rear end that all these fun facts are going to be getting out there to the masses because it is an educational thing.
Yes, it is.
There's a huge gap that we still have to bridge when it comes to our country. That gap really boils down to it is the haves versus the have-nots.
Most definitely.
Me and my show prep, right?
I like it.
So, and I've talked about this before. So 2019 survey of household and consumer finance. Household net wealth in this country was 188,000 for white families. It was 36,000 for Hispanic families, and it was only 24,000 for black families.
You have Asians on there?
Asians are not.
They're kicking everybody's tail.
They're not in this data, but I know that they're up there. But so, and this is interesting, right? And I don't know. I just find it, the correlation to be interesting. So, out of the 11,000 plus units of T-Shack families that were served last year, 44% of those went to Hispanic families.
Okay.
Because we're in Texas. I mean,
Sure.
demographics. 31% went to white families, but only 12% went to black families. And so it just, and this isn't out of mortgages, right, that were originated. This was just out of, people that utilized the T-Shack product.
Right.
And so to me, I kind of see that as, well, perhaps, there's not enough education in the black community about T-Shack and TDHCA and Seth and down payment assistance.
Being a person of color, I can shed light on it. You are right. Education, number one.
Yeah.
They don't know it's available. They don't seek the information. And those aren't the things that our community holds higher in regard. Now, I'm not saying that they're dumb or anything like that.
No.
But the second thing is credit.
Yeah.
Even if they knew about it, they don't qualify at the moment, but they also, leaning back on education, don't have any sphere around them that can say, hey, it's not too late. You can fix your credit.
Yeah.
Get a plan together. Get with somebody that knows how to do this. Educate yourself or get educated. That will allow you to get to the next phase that you can now partake in this.
Yeah. And the right kind of credit.
Yes, sir.
I hate it when I see a credit report and I've got it's typical for the Hispanic community.
Mm-hmm.
There's a lot of, installment loan from payday lenders.
Yes.
I mean,
True.
it's
true.
The data doesn't lie. But what kills me is that type of credit is weighted less than other types of credit. So somebody can have 8 pages of borrowed $1,000, paid it off, borrowed $1,000, paid it off, paid it.
Right.
And their credit score is actually going to be lower than somebody that, has maxed out credit cards.
You're right. You're right.
Kills me.
It makes sense, though. I mean, knowing credit as much as I do, these are installment loans. They are short-term debts, whereas a revolving is more of a long-term commitment.
Right.
You're able to see more of their daily habits, monthly habits, etc. You almost wish, and it's not going to happen. They're not going away. Payday loans aren't going away. It's one of the most profitable industries out there.
Yeah.
People bash them, but then they run and go and get one.
But right. But it's education. People
Correct.
just don't know what their other options are.
Yeah.
And so that's what just kills me. So Bexar County, 4th largest county in the state for T-Shack loans, originated 732. 732 San Antonio families used T-Shack last year.
And this is the same one where there were 11,000 of them.
Mm-hmm.
So you're saying out of that, ratio-wise, we didn't even scratch the surface. We didn't even take 10% of that thing.
No.
Wow.
Yeah.
Education.
20% of consumers in America still believe that we need 20% to put down when we buy a house.
Yeah.
And so
Despite all the TikTok videos.
yeah, I mean, yeah, right. I mean, they're not following the right people, I guess. But this is where I'm just on this huge education kick for down payment assistance. I see you doing a service by educating people on manufactured homes.
Absolutely.
I mean, that's 100% an affordability.
Shout out
right
to
there.
Titan Factory. I got in there. They gave me the opportunity.
Awesome.
And once we got the one-time close, two-time close,
Yeah.
it was like, holy cow, I've been in this game 13 years and I just figured this out.
They're not that hard.
No.
But it's the same thing. But people just don't know.
Mhm.
And unfortunately, it's like with the manufactured stuff, people hear manufactured and, oh, they
Yep.
roll their eyes.
Yep.
Even our real estate partners, because they don't want to
You're
mess with it.
correct.
And it's like, dude, this isn't Cousin Eddie's tenement on wheels pulling up to Clark
No.
Griswold's house.
They're
I mean,
super nice.
This is granite countertops and whatnot.
Yeah.
So, but again, it's just we just have to continue to go out there and educate, and that's why I love your platform and being able to come out here and share my hot sports.
Hey
takes on
man,
things.
I will continue to have you back as long as you keep giving us these great nuggets. It's a wealth of information every time that you get on here. I learn plenty. Go ahead.
Oh no, I was just gonna say, what we should do, and this would be a really interesting one because I was just jotting some notes down. On another show, we should actually do an educational piece on what is debt to income ratios.
Ooh.
And responsible and responsible.
Matter of fact, John, what are your thoughts on doing a series?
I'd love it.
An educational series with, and this would be a separate playlist, so to speak, still podcast related, but customers, realtors, even other lenders, if you want to know about this topic, DTI, whether it be down payment assistance specifically, or even we go program by program, I would love to do that with you. And I think it would also allow people to see how cross-pollination works without the conflict, and see what it breeds.
We're just collaborating. Because at the end of the day, if our borrowers are better educated, if our real estate partners are better educated, then we're delivering a better experience for everybody.
That's right.
And the DTI one just popped out because I was just jotting some notes down when I was running some math, and I was like, man, okay, a lot of people don't realize that a 55 back ratio today is really like an 85 back ratio.
Yeah. Because we're using a top line income, not after tax.
So it's like, okay, so somebody making 60 grand a year, okay, $5,000 a month. So that means their semi-monthly paycheck is 2,500. There's a really cool, so you could just Google
Paycheck City.
No, well, this one was it was an ADP calculator that popped up. But so it did. So if you have a $2,500 paycheck, in Texas, SUDA, FUTA, FICA, it was $2,091. So that's without any 401k contributions or anything else like that, right? So take home pay is $4,182. So if somebody has a $250,000 mortgage, assuming $2,500 is their monthly payment, that leaves them $1,682 left over at the end of the
to live.
To live. That's assuming they have no car payment, credit cards. They still got to. I mean, I know what my HEB bill is.
Yeah.
You still got to put food on the table.
They just show up at the door these days. I'm like, dang it again.
Oh, see, I like going to HEB. That's another meditation for me too.
Like washing the car.
Yeah.
It's true.
Exactly. So no, I would love to do an education series because, man, I mean, I've got pages of notes like these.
Good. And I love that you come prepared. Most do come prepared, but when we have our discussions, it's very factual based driven and it's data that we're able to apply to scenarios, which then paints the picture for those that are just listening to this on Spotify and Apple Podcast.
See what you did there.
That are able to kind of envision what we're talking about. And then they go, oh, wow, that's how that just applied to that. Yeah, we did that. John did that.
It's telling the story.
Correct.
And it's funny. I'm doing a longer term exercise with my team. Right, we had everybody come up with the individual core values.
Okay.
And now we're working on action statements.
Yep.
Then it's vision. Then it's goals. And the whole thing is you're developing your story.
Yes.
Because if we can tell the story like you and I do, then people listen to it. They could relate to a story better. They just absorb it better.
Well, that's an incredible practice that you're doing with them. I learned that through coaching years ago. And what people don't understand in going through the motions of developing each one of those pieces is once you take all of those things, practice them, believe in them.
Yes.
it's not very difficult to strike up a conversation to pull any of those things out in any given situation. You don't have to give somebody your book. Pull out what they're asking.
Because then it's coming from the heart.
That's right. That's right.
It's not a script.
You didn't make it up.
Yeah, this is
It's
not
not a ploy or a
not a
gimmick.
script. This is from my heart.
That's correct.
Yeah.
That's one of the best traits that you have is you speak from the heart and there's a passion for what you do. I think we both have that.
Yeah.
I'm looking forward to the future.
No, me too, brother.
Yeah. Well, guys, we're probably going to cut this short. We've got a ton of information that was jam-packed in this. Joey, how long was that? Maybe 40 minutes? Oh, okay, 55 minutes. All right, not bad. Not bad at all. Well, we can just get going, man.
We really can. Good thing there's not beer here. I mean, we can be here all day.
16 steps away. Everybody, I want to make sure, John, if you could one more time, company, where they can find you, all that good stuff.
No, I appreciate that. So John Hudson, co-founder, H&M Mortgage Group, stands for Hudson and Morton, and they can find us at www.hmmtg.com. And just remember, you can't spell home without H&M.
Boom. Ladies and gentlemen, thank you so much for tuning in. I hope you got plenty out of this. Share this episode. Talk about this episode. Use this episode when you're talking to your borrower so that it'll help you articulate your points, potential options that they maybe didn't know about before. And you're hearing it here today. Don't always believe what you see.
Yep.
Dig a little deeper. So we will catch you on the next one. Welcome to Key Factors Podcast, where knowledge meets ambition in the fast-paced world of real estate and mortgage. I'm your host, Mark Jones, bringing you the latest insight, trends, and expert advice to navigate this dynamic property market. In each episode, we dive deep into the heart of the industry, dissecting market movement, exploring investment strategies, and unlocking the secret to real estate success. Whether you're a seasoned professional, an aspiring investor, or simply looking to stay ahead of the curve, this is the ultimate guide to making informed decisions in the world of property and real estate. So grab a seat and let's uncover the key factors that make all the difference. Welcome to Key Factors Podcast. Let the journey begin.